All right, all right, all right. We are live. Good morning, everybody. Happy Monday. Hope you all had a great, relaxing, enjoyable weekend where maybe you got to go outside, you got to turn your brain off. But we're back in the saddle and we got things to discuss. There was some movement over the weekend as it pertains to the Twitter Elon Musk saga. Things appear to be moving rather quickly right now. We will talk about that. We also want to talk about how just there is almost nowhere to hide right now, right? A lot of stocks, a lot of sectors, most of them, frankly, all of them, week into the weekend last week, everything is pretty much down again today. So we'll talk about that and that the lack of safety out there in the market. We got some earnings to discuss. This week and next week are the earnings weeks. This week is the big week in terms of just big names. Next week there's actually more companies reporting, but I think I saw a stat this week. It's like 46% of the S&P 500 reports earnings this week. So we're going to talk about that. It's a big, big week on the earnings front. We'll hear from Google, Facebook, Apple, Amazon, to name a few. We have Coke this morning. We can talk about that. So that's the show. Tim Quast is back in the saddle for Market Structure Mondays. So do me a solid, smash that like button, and here we go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on Joel and Dennis. Good morning, fellas. And Joel's charts are here as well. Joel, how are we doing this morning?
We're not doing well. We're down 37 handles at 42.30. Not much of a chance off that open. And you can see where we're going into dailies. I don't have to point it out to you. Crude in the red by 522 at 96.87. Gold losing 25 bucks at 1908.80. Silver in the red by 62 cents. We lost 24. Now we're trading in the 23 handle, 23.63 and a half. Bitcoin futures, they're trading in the red too by $610 at 38,845. And we have Ethereum futures. They're trading in the red too by $91 at 28.60, a little bit more on a percentage basis. Dennis, did you get rich on Friday buying options? Because
No,
what you would have,
unfortunately, I didn't.
you got to get rich.
Yeah, you
buying
got to buy
options
those options and
on
watch them
big
expire
down days.
worthless.
You get rich
Puts were working.
automatically if you bought puts.
Puts were working. Puts
Yeah,
were working.
puts were working.
But
So
short stocks works better because I don't have to pay those premiums. So
yeah,
we're in this market now. We're in like a good sell-off. I mean, we've been just kind of meandering around, not going. There's been rotation. Oh, well, something's going down, something else is going up. But the last 2 days is different. The last 2 days, we are seeing selling across the board. No place to hide. That's what a bear market is all about when you start seeing the leaders start to be sold as well. And the oil stocks are getting hammered here once again. Crude coming down. So demand destruction. We keep saying it on this show. And if you're hiding in commodities, the time to hide was over a few days ago. And now I'd be using rallies to get the hell out. Again, I think we're in this market environment where there is more pain ahead. Now, some stuff is oversold, so there could still be some rotation. And the market, I mean, there's not a lot of times you're going to see the S&P, maybe we should start there, fall 280 handles in 3 trading sessions with really not much up movement at all. Pretty easy on the short. So I would think a logical place to bounce if you're getting the S&P is probably at the year low of 410 on SPY. There's also a couple other lows too. So I think you're getting into an area where you could get a little bit of a bounce. But I think the bounces are still to be sold.
Well, for 2 things I want to mention. One is, I mean, how about the wailing of stocks and futures like at that 4 o'clock close? Like 67, what did they actually give you? 67 and a quarter. Are you kidding me? I mean, we were at, we were 17 handles lower almost immediately in the after hours. So, man, oh man, I mean, there was no feeling good, on the close
No.
over the weekend. I mean, you just felt that pressure. The pop you got, you kissed it. Nothing done there if you were trying to sell at 67 and a quarter. But one chart that we looked at on, I'm not sure if we did it here or we did it on pre-market prep plus, but look at that 2,500 in Google. Look at that. You had the low here. You talk about losing the leadership. You had the low here, boom, right? You had the other low here, boom, right? 2,500, boom. You had the low here, boom, 2,500. And what was underneath that?
Nothing.
Absolutely
Air.
nothing.
Yeah.
And then similarly, this broke down a few days ago. It was 3K. It was 3K in Amazon,
Yeah.
right? It was there.
Yeah.
It was showing you. It was aligned in. Look at that. All those lows in that area. Now you got Apple on deck. I mean, is there anything Apple can do? I mean, even if it's like a good report, I mean, you think
That's what
you
I'm.
just feel like even if they have a great report, it's gonna be like, oh, okay, well, I'm not gonna buy it. But if you want to buy it up to 165,
There's willing
166,
sellers.
slam them. Slam
We
them.
What's going to happen is, even if they say just one bad thing, they say 9 good things and one bad thing. All everyone's going to hear is the one bad thing.
Yeah. The Bears are winning the silver lining war right now for sure. We're looking at silver linings on the bearish scenario instead of the bullish scenario. I mean, we got a long time before Apple earnings on Thursday. There's going to be a lot more volatility ahead of that. We're going to hear from tonight's quiet. There's really nothing going on tonight.
Yeah.
But when you go and you start looking here, and I mean by tonight, I mean we got Whirlpool.
I'll bring out the calendar.
Yeah, there's like nothing big tonight. Whirlpool's probably the headliner here.
Quiet.
But you just wait till Tuesday. Tuesday, you can see it there. Alphabet. You got Microsoft. You got Visa, Texas Instruments, General Electric, General Motors. Wednesday, Facebook, PayPal, Pinterest, Ford, Boeing, Qualcomm. Thursday, Apple, Amazon, Intel, Twitter, MasterCard, Roku, McDonald's, Caterpillar. Friday, even ExxonMobil, Chevron. So you got a lot in the heart of earnings season, a lot of tech earnings here. Tuesday, most important report is probably Google. Microsoft second, even though Microsoft has, I believe, a bigger market cap. I think they'll be looking at Google more. But both of those stocks are very important to give you a feel for what are they saying going forward. I think the earnings are going to be okay. It's the guidance that I'm somewhat worried about because I still think you've got some demand destruction happening across industries here right now.
Yeah. Now, speaking of Twitter, maybe we should go there.
Yes, we should.
Now, because things were moving over the weekend. There was a couple reports. I believe the Wall Street Journal had a report. I think I saw another one as well, saying that Elon Musk had met with some big Twitter investors on Friday and was meeting with the board over the weekend. The market and the tea leaves are saying now that Twitter and Elon Musk are close to a deal. That's what that's what the rumors are swirling this morning. And how we got to this point, we don't really know. Hopefully, we can get some more details on the conversation from the past couple of days. But the reports are, and the market's reaction would indicate that it does appear that the two sides are close. New York Times says they're in high level discussions, advanced talks is what they said. So it's only been a week? No, more than a week since the offer was made. I don't even actually remember when the offer was made.
A week ago, Thursday.
Okay, so a little over a week ago. So it would appear that they're closer to a deal now.
Well, I think the market environment has helped this. I mean, you're starting to see Pinterest get hammered, Facebook making new lows. You just look at the peers and you think, and I've been saying this when stock was trading 45, 46, I'm like, the upside is your 53 or 54.20. The downside isn't from where it came at 39 anymore because the stocks have all been hit a lot harder. The downside for Twitter, if the deal falls apart, is now $35 or $33. So I think the board starts looking at the peers. They start looking at the market environment. There's no other button. There's nobody else coming. I mean, this is your out. This is like your chance to like get out at a ridiculously good price. So if I'm the board, I'm saying take the money and run, because if we don't take the money and run, now we're stuck in this environment here that is not nearly as accommodating, the macro environment that is, and we've never been able to figure it out when the times were good. So I think that they're making the right call if they are leaning towards a deal. I would take the money and run. 54.20 sounds pretty good in this market environment.
It's not even I don't know the word you just used, but it's not even that amazing of a price. It's just not a horrifically bad price.
I think it's pretty good. There's not a lot of stocks getting back up to new highs on the year, which that would put it very close to new highs on the year at 54.20. So I think in this environment, it's a pretty good price.
Yep, and I think after he buys Twitter, I think his next project is going to be rewriting the First Amendment.
Okay.
And what free speech is, right? To include clear and present danger. That's what he's going to do. He's going to. Why not? If you're going to buy Twitter for free speech, why not redo the First Amendment?
I will just say this. I will just say this because I started watching the SpaceX documentary that's on Netflix over the weekend.
I want to watch that.
I'm like a third of the way through. It's basically a commercial for SpaceX, but it did make me like Elon Musk a little bit more. And I definitely wouldn't say I love Elon. I don't hate him either. I'm somewhere in the middle, but it definitely made me like him more just watching how much he cares about space. So I'm feeling better about him now than I was a few days ago. But I gotta admit, I am a little bit surprised to see this deal sort of. I didn't think it was going to happen, honestly, and especially because I think Elon tweeted over the weekend, like, time to move on.
I saw that too. And I was like, what's that mean?
That could have been referring to anything.
I thought that too.
Yeah. So, like, I honestly, if I was a betting man, I would have bet that this deal doesn't happen. That appears to have been the wrong bet now. But
he wants it. He wants it. There's nobody else that wants this. Not at this price. Yeah, $30, $35. Maybe there's a suitor at 54.20. There's one suitor. His name's Elon Musk. Take the money and run. Don't play games. We're not in Kansas anymore. We're not in 2020 anymore. There's no better bits coming here. There might have been a few people sniffing around, but they're sniffing around saying, this is not the market environment.
Doesn't even want to. It looks like they don't even want to partner with them, right?
No, I wouldn't. I mean, maybe, on lending some money or something, but, to be like a shareholder in here, I don't think so. So he'll get the money. He's rich. He can get the money. So let's talk about the repercussions of this.
He has funding security.
Let's assume the deal looks like it's going to go through. I mean, everything can change, but first thing you think, okay, DWAC has got to be trading down on this. I just brought up for the first time today. Yes, indeed. Making new lows. Obviously, this is the Trump's free speech platform, but with Musk, rah free speech, it's going to be competition here, and obviously DWAC, not good news for them. The second company that's going to be directly impacted by this is Tesla. Dan Ives saying because he might sell shares on CNBC. I'm going to take it a step further. I think they're selling Tesla because he might be running himself a little more thin. I mean, Elon Musk, if he's running Twitter now and running SpaceX and running everything else that he runs, is he, essentially going to have some less time for Tesla. So I think that's where, this is only one human being, and he's the most important human being to all of these companies going forward. So if he's busy with Twitter, he's not going to have quite as much time for Tesla. And I think that is why they're selling Tesla down to the tune of 3.5%. But there's also the risk, to Dan I's point, that he might sell some of his stock to raise the capital.
You got to keep an eye on 975. I mean, it sure looked like that was going to be in the rearview mirror after the earnings report, right? That was part of the rally that we had on Wednesday. It looked like you didn't even have to worry about it, right? And now you're trading below it. So for you Tesla bulls, bears, whatever you are out there, keep an eye on 975, because you see these kind of charts where there's like a lot of room on the downside. You're trading down in the pre-market, you'll probably get some wiggles. I mean, they'll try and take it back above there. What was yesterday's low in Twitter? 994, you might be able to sneak out at 991, 992. Nice rally. But closing below this 975, I mean, you guys see what's underneath that. And it looked like it was like forget about that level. We're going to 1200, and then the market dynamics. So just want to emphasize the importance of holding 975 in Tesla.
It's tough. We're in a really tough environment, but Tesla's held up fabulously. I
Yeah,
mean,
it
we're
has.
starting to lose some of, Facebooks and the Amazons and Netflix and Googles, and Tesla continues to be resilient. Obviously reported the awesome earnings report at the exact right time. People are still willing to pay. But your line in the sand is absolutely correct, Joel. This needs to hold the 975 area right where it's trading right now. And I think it could,
It
but
very
if
well
it
could.
doesn't, there's nothing below that. So we know what we've seen here, and Tesla's its own animal, so it may not follow suit, but what we've seen happen during the course of at least companies reporting lately is that they rally, and then a couple days later they start forgetting about the good reports and they start selling those companies too. So it's had companies have had great difficulty holding up, and the stocks that are selling off on earnings are not coming back. So again, more indicative of the market environment that we're in, which is a bear market right now.
Yeah, it is. I mean,
yeah, people are saying, is this a bear market? Is this not? It's a bear market.
The best performing index is the Dow, and it's down 8%.
Holding up.
And it's down 8%, and that's your leader, right? So,
and the last 2 days, very ugly. And again, that goes to the point where they've started now raising cash across the board, selling the leaders, not necessarily selling the leaders to finance the laggards, but just selling the leaders to raise cash. And I was doing the same thing too. I sold some of my new core. We know that right before the earnings report 3 days ago, because I'm like, it's just gone so far. And I mean, if I'm really going, with the thought process of we might go into a recession, that's not good for steel companies. Recession is not good for steel companies. They should be a direct hit. So here you've got stocks like Cleveland Cliffs, U.S. Steel, trading at 52-week highs a couple days ago, or at least near them. Nucor definitely at a 52-week high. I think it's a gift. I think there's so many gifts out here still. So to everybody's question that keeps tweeting at me, what are you buying? You're asking the wrong question. Ask me what I'm selling, because I'm selling, all these stocks like Procter and Gamble too. At 165, Joel, we talked about this on Friday when the stock was 164. I'm like, you got a line in the sand at 165. Now it sells off $2 from there. Great earnings report, but again, we're at a point here now where they're taking no prisoners, and they're starting to sell some of the companies that have held up very well.
Yeah. Wait, what else was on my list here? Oh yeah, I do want to talk about China just for a second, because it's not getting better over there. More lockdowns, threats of more lockdowns, especially around Beijing. Now we've moved on from Shanghai. Now we're talking about Beijing. Chinese markets all trading down today. Their worst days in weeks for the major indexes, and it just, the pain continues. So there's just no end. There's no end to it.
I on the China, yeah, and there was, though, we had that awesome bounce, and we kept saying it. This is the time. I mean, if you're in Alibaba and you're in JD, we talked about this a lot during March. I mean, Alibaba gave you such an out. $73 to $120 in 7 trading sessions. What do you do when your stock goes up 70% in 7 days in this market environment? You sell it, and you sell it again. And you know what? Baba, JD, Baidu have now leaked back 2/3 of those gains. I think they're going back down to the lows to retest it. There's no reason to think, yeah, maybe we come out of lockdown. Oh, that's good news, and we'll get everything going again. But we still have a lot of other concerns. I mean, the lockdown in China is the least of this market's concerns here right now, Joel. I mean, what are your thoughts here? I mean, we've went through issues, with higher inflation and interest rates, the Ukraine situation. Are you worried about the lockdown in China?
We haven't touched on the Ukraine situation and what's going on there. I mean, that first come up. No, I mean, there's not much on the macro front here to to be positive about. And the whatever Putin says, we're gonna have ICBMs that can reach the U.S. A lot of negative things out there. The China thing, I mean, it's been building and it's been building and it's been building. So once again, the market participants here up to this point, well, it's not here, right? It's in China, right? So it kind of like the war is over there. Well, it's not here,
That's
you know.
true, Joel. That's a really good point.
But but
And
not now. I mean, everything comes to roost. I mean, now it's like, yeah, maybe this is going to be a little bit of a problem.
no, I mean in the U.S. though, I mean we are very insulated. I mean, like even just the cost of goods, right? Like inflation in the U.S. is nowhere near as bad as inflation in Europe, right? The performance of the stock market is nowhere near as bad as it is in other parts of the world, right? So it may seem like it's bad for us, but the fact is it's worse everywhere else. So I don't know where else you go. Where you gonna,
Cash, man.
yeah,
You
maybe,
should have been raising cash months ago, as
maybe,
we've been talking bearish on this show for months.
maybe.
And we had the little spell of bullishness where I thought, well, maybe I'm wrong here. I start to bring myself off the 50% cash and go down to 40% cash. Mistake, and proven mistake. So what do? I turn around, sell the stock. I'm wrong. I want to get back to 50% cash. So I mean, this is a tough market to just be all in on, and people are still like this market's thought process just doesn't understand that we are not in 2020 anymore. ARK is still having major inflows coming into the fund. I mean, this is showing you that the FOMO still exists, that people still believe, that they think these stocks are coming back. I mean, that they want to give Kathy Wood all the money to invest because in 5 years she's going to go up 50% a year or 40% a year that she's talking about. People are investing along that. You know what? She might be right, but everything else is telling me that she's wrong. So, I mean, but people are still coming. They're still investing. They're still coming to this market. They're still asking me all weekend, every night, what are you buying? What are you buying? What are you buying? Until they start asking me, what are you selling? It makes me not want to buy.
Maybe the reason they're asking you that is because they've already done their selling, Dennis, and now
and that's great. Geniuses. If you were selling and you're sitting on 90% cash, give yourself a pat on the back. You did the right thing. You're in a better position than I am, who's been very bearish on this show for a long time. I mean, 90% cash, I'd be very nervous if I was 90% cash. I'd be buying stocks. If I'm 90% cash, I'd be buying some stocks today because we are oversold. There is some cheap stocks out there, but it all depends on your own position. If you're 90% stocks, I'd be using rips to sell. If you're 90% cash, I'd be using dips to buy. You're getting another dip here again. I don't think you should be 90% cash in this environment unless you're a trader, and you're a day trader. But if you're a long-term investor and you're sitting 90% cash, that's a lot of cash because we've come down quite a bit on a lot of stocks.
And so that sort of leads us into, and I know we kind of discussed earnings already, but like Randy on our news desk was asking me this morning, like, what do I think Facebook's going to do this weekend or this week? And like, if you had asked me in any other prior quarter, I would have said, I don't want to bet against a stock that is already down 2/3.
That's kind of the one you want to bet on. The trend's your friend, man.
Well, no, but
that's maybe why they're buying Kathy's stock, Kathy's ETF. They're all down 70%.
I'm saying, like, I would have said, how much further can it realistically fall? Well, Netflix just proved it can fall a lot further. So I don't know how you buy anything that's reporting earnings into their earnings report.
Into the earnings report is scary.
It's terrifying.
Terrifying. You're absolutely correct. Terrifying is the word to be buying. And you know what? You're going to be rewarded in some of these stocks. There's going to be some stocks that come out and they're going to gap up. There's going to be some Teslas in here. There's also going to be some Netflixes that are going to gap down significantly. I mean, Google's not an expensive stock. I own Google and Microsoft. Both these companies reporting Tuesday. I'm not selling them ahead of the reports. I've owned them for a very long time. Google has broken down technically. Doesn't look great on the charts, but when you've got, a 20-year time horizon, is Google expensive? No, it's not expensive here. Would I buy some Google, more Google? Probably not, because it's already a huge position in my portfolio. But if I didn't have any Google, I wouldn't buy it ahead of the report. But if it got hammered on the report, maybe down to that 2,000 area, and that would be a real hammering, I mean, maybe a strike. I mean, a lot of these companies are still very good companies.
They're all
good companies on the pullbacks.
Yeah, a lot of them are great. It's like, and we're gonna look back in a few years and say, "Oh gosh, remember AMD below 100?" But that
Maybe.
was,
I would have put AMD in that.
all right, just an
category.
example.
I would
But
not put AMD in that.
I hope I own AMD. I'm gonna killed on it.
I mean,
Horrible.
yeah, but some of them you are gonna look back and say, "Gosh, I remember when." And I remember a few years ago. Remember when Apple got to one. Wait, this is pre-split, right? Because they did that split, but it was 150 or something. It was 6 years ago, 5 years ago, and it was the cheapest it had been in a long time. And then it ripped for 3 years after that. And I was like, damn! If only I just pulled the trigger on that Apple pullback. But of course, you don't know. By the way, I don't know if you guys saw this over the weekend, but some text messages came out, some old text between Elon Musk and the Saudi Public Investment Fund as it pertains to Tesla, because there's this shareholder lawsuit about the funding secured thing. And Elon confirmed just now this morning on Twitter that the reason he said his famous funding secured thing was because on a private phone call with the Saudi Public Investment Fund, they said they committed unequivocally to take Tesla private with Elon Musk. So that's why he said that. And then they waffled a little bit, and that's why he lost the funding. But there's a timeline where the Saudis own Tesla. We're not in that timeline now.
Isn't that crazy?
But
that
there is a
happened.
timeline. There is a timeline where the Saudis own Tesla.
Yeah. That could have happened. That was close to happening.
It could have happened. It almost did.
It almost did.
So Saudis, one of the world's biggest producers of oil, wants to own an EV.
They invest in everything, Joel. They got so much bloody money.
That's
so much.
That's so old. I mean, is that something still? Are we still talking about this in the media? I mean, is this actionable information?
Not right now, no. But there's, I mean, I've wondered. I've wondered for years. Well, where did that funding secured thing come from? Now we know. He didn't pull it out of his ass. It came from the Saudis. So, and I just thought that just happened just now. I saw it on Twitter, but very interesting scenario. I'm guessing the Twitter Elon Musk thing will resolve itself. It looks like maybe today, maybe tomorrow. I think I said last
Still
week.
Such a premium though, Dennis, huh? Look at that. 54.20 versus, 51.24. Is this just $3 of free money?
I wouldn't buy 51.20. What if something falls apart? You're $3 up high here right now, and you're $20 downside. So a high, very, very high likelihood I think this deal is going to go through, and I think the risk arbs are pricing that in. But if it doesn't go through, if Musk just says, "Okay, I'm sick of these people, I'm out," this thing's $35, maybe 33. So I'm like, you've got to have some type of discount. It's not going to go to 54.20. If it goes to 53.50, I'm going to short it. I mean, there's risk arbs that are, going to be there unless there's new information that comes out that will short the hell out of it up there to risk 70 cents to see the downside. It's all risk reward. Right now, there's $3 upside, $20 downside, but there's a high probability that you're going to get the $3. So that's why it's there. But I don't think it's going to 53 today. Yeah. I would be inclined, if I was on Twitter right now, I'd probably take the 51.20 and run, just because there's too much risk that something could go sideways.
Yeah, I mean, and we talked about this last week. If you just threw out the information, like, okay, the no deal on the table, you get a stock has a gap up and it holds the bottom of the gap, and it kept on doing it. It did it even as late as Wednesday. It didn't trade down to the 44. It traded down to 45.03. But if you're just a technical trader and you're not, you're just putting on the technical goggles, what's it tell you here after the gap up? This is the initial days when it hit, but 44.71, 44.44, 45.52, 72, 36, 45. And then they actually stepped up, got a little bit confident on Friday. Maybe they had a little bit news that we didn't get until today. But the people that bought it and bought it in size here, well, hey, yeah, maybe it gets taken over at 54.50, but if I got 7 zillion shares on it, 45, 46 average, I'll ring the register, right? Because that's what I think as far. And that's the same phenomena that we've been seeing in coals, right? Yeah. Isn't this 62, 65, 70, 75? Well, I keep hearing about 65 and found sellers at 64. kept on hearing about buyers at 70. Well, couldn't get through 62. Actually, looking at this is starting to come down a little bit, Dennis.
I said 52 to 53. I think you strike on Coles because I do think a deal's going to get done here. Just my own.
We're
personal
rallying
opinion.
here. I don't know why, but we are.
Just a teensy bit. Just a teensy
We
bit.
rally.
mean-
We rally. We sell off 280 handles and we rally 10.
Just a teensy
Yeah.
Just a little
We're
Let's
20
give her some
handles off the
perspective here.
low. I'm just giving you the market information. I'm just not telling you. I'm just.
The bear market is.
It's
dead.
a rally. It's a 20 handle rally. What's that?
Is the bear market officially over? Can we ask Kramer if it's still officially
it's over now.
Oh,
We're rallying. It's over.
It's over. So Coca-Cola, the only
Yeah.
earnings report that we have
Holy
of
mackerel.
note here this morning.
Yeah.
We did have ATVI, but we know that's already
Huge.
taken over by Microsoft, so there's not much to talk about there. But Coca-Cola did
Yeah.
report here. Spencer, tell me.
This was a huge one here for Coke. The EPS 64 cents versus a 58-cent estimate. Sales $10.5 billion versus a $9.8 billion estimate. Organic sales growth of 18%, which doubled the consensus estimate. Again, talking about companies that can easily just pass along, just ingest price increases and just pass them along to the end consumer. It's Coca-Cola, right? I mean, people are going to pay for people are going to drink soda regardless. So
it's a recession-proof stock to a certain extent, and that's why it continues to get bought up to pretty high levels. So, I mean, they're if we're going into a recession, Coke's going to perform better than the other companies. With that being said, they started selling everything on Friday. I'm not buying anything right now. If I'm buying anything on rallies, it's I'm looking at while selling stocks, I'll be buying US dollars. Coca-Cola up $1.50 here. It could continue, but again, we're in this market environment where money managers who aren't even at their desk yet because this is Monday morning, they're just getting in. I think real money managers are going to come in here and say, I need to raise some cash. I'll sell some of my Coke. Honestly, I think that could happen.
I mean, 67 would be the ultimate juicy level, but that would take it up $1.90. What I'm thinking is a bunch of stock probably that's going to go for sale in previous stock in the book will have to get executed at 66.50. So I think they'll make if they try and open it up here. So I would use that. If somehow it got to 66.50, then 67. But keep an eye on that open, see where it opens, see if they can, fulfill all the sell orders, because a lot of people were probably out there, then got caught on the decline on Friday. So keep an eye on your pre-market high, see where we open, and absolute top. No, not absolute top, but 67 all-time high in Coca-Cola. And just let me give you the all-time closing high, because that's where the big boys have the best mark. And that's 66.21. So you get under 66.21, maybe get back into yesterday's range.
We should mention that Pepsi reports tomorrow morning. Pepsi is a little bit more of a different
Yeah, a little different.
They're more diversified. They got the Frito-Lay thing going on, but hey, Pepsi too, pricing power, right? So Coke, strong quarter. The takeaway seems to be Coke is able to absorb inflation.
Pepsi can too,
because they're Coke, and Pepsi probably can too, frankly. And so, all-time high.
And that's good news. But again, there's just a lot of money hiding, and don't rule out the fact that people will just want to raise cash here overall as we get another market sell-off here today. So that's why I don't think the Coke gains hold up. But that's just a market opinion. Anything can happen. Obviously, I might be wrong. It's the kind of stock that, if you have in your portfolio, you're definitely safer than a lot of other stocks. But I think they're in the mood to sell stocks, and Coke is still a stock.
But Coke is also a physical thing. We talked about last week owning physical goods versus
that's over.
That's over?
Oh yeah, we've been talking about that being over the last week. That was a trade a month ago or 2 months ago. Owning the stuff trade. The stuff trade is starting to get hammered. Which is to my conversation with the used boat prices coming down, used car prices coming down. There's been rampant inflation in a lot of different industries, and that stuff trade is starting to come off here now too.
I mean, some stuff is. I don't know if all stuff is, but
I think we're going to see a lot of stuff starting to come down. But again, to your point, Coca-Cola prices going down here now. They got pricing power. So if you don't, own any consumer staples, but again, am I buying stocks on rips? No, I'm buying stocks on dips. This is not one I'd be buying today.
Yeah, all right. It is 8:35. We are awaiting Tim Quast to join us. He's back from his trip to the Bermuda Triangle, and he survived too. So
excellent.
we'll talk to Tim
These-
when he joins us in a. Oh, actually, there he is. He just joined. There we go. All right, it's Tim Quast, Market Structure Mondays. Let's do it. Mr. Quast, welcome back, sir.
Thank you. I miss you guys. Good to see you.
We missed you. I wasn't sure you were going to make it because I know you went to the Bermuda Triangle and that could be a little bit iffy. So it's good to see you made it back.
Right, I could have expired or just decided to stay there. Either way.
That's true. So wait, where'd you go exactly again?
So we went to St. Martin and St. Bart's. So St. Martin is it's French on one side and Dutch on the other side, and you always want to go where the French are, because that's how, if you like the good stuff, follow the French around. Okay. So you have of course I gained like 7 pounds.
French fries, right? To get the French fries.
That would be kind of the bottom rung of the French food spectrum, but that's where we went. So what there are what there's a lot of in that part of the Caribbean are brown boobies. Not a lot in St. Bart's. St. Bart's is kind of homogenous, so there are frigates there, but a lot of brown boobies in that part of the Caribbean, particularly the blue-footed brown booby, which is about a seagull size.
Yeah, okay. You're referring to bird. That's what I thought, but I want to bring us back.
I do.
Tim, so you are back in the saddle now after being out for a couple of days, but I still do want to get your thoughts on last week and just the broad-based weakness pretty much everywhere.
Right. Well, when the going gets tough, I'm not sure what the tough do, but we go to St. Bart's. But I was not surprised to see that we had a difficult time. Remember, we talked the last time we got together. We talked on April 11, last Market Structure Monday, and I said, so typically, when broad sentiment, so that's a measure of supply and demand. When supply and demand are kind of weak into options expirations, and options expired while I was gone, that they will recover afterward. If they don't, then we have bigger trouble. So the cycle finished, and I realize everybody wants to say, well, it's interest rates or it's concern about earnings or whatever. Well, those are ancillary to the basic supply-demand components of the market, which are measurable. So Wednesday was the conclusion of April options expirations, VIX volatility expirations. And then what happened Thursday and Friday? I mean, you can just, if you have underlying weakness in the supply-demand equation, that's what happens. And you might say, well, Quast, that's just weedy market structure. Can you put it in simple terms? Yes, I can. So the market is comprised heavily of tech. It is, right? So if money doesn't flow to equities, and in particular to the growth component of equities, the market is going to struggle. And we've talked often about that on this program, that if tech does poorly, it will be impossible for the market to do well. Now, I've been, saying you want to go where, from a market structure standpoint, there is steady demand and insufficient supply. And I mentioned before I left things like Amarin, Newmont Mining, Dominion Resources. It doesn't matter what their fundamentals are. You want to have your money in things that have steady demand and insufficient supply. And that has been heavily concentrated, no surprise, in utilities, energy, materials. Building materials look pretty good. Home builders look pretty good. Those are the things that have done well. And I could show you, on April 11th, I mentioned those things. And, basically what I've just recapped here. That's what's going on.
Now, does that trade continue here, though? Because we saw on Friday, when you were away, that some of that trade started coming off, where they started selling everything. It's been a we sell tech, we sell the growthy stuff, but now they're starting to pick on some of those safety names. They were picking on the oil stocks, they were picking on some of the consumer staples, they were starting to pick on some of the utility stocks as well, starting really Thursday, but continuing into Friday and continuing into this morning as well. Now, talk about market structure edge. Are
Yep.
you thinking this is a time to maybe ring the register on some of these names, which have definitely outperformed? Or is this just another dip to buy those safety names?
Well, great question. And if you were if you're a follower of the principle of secular or cyclical bear markets, where a secular bear market is one that is persistent and elongated. A cyclical bear market has little steps to it, and I'll give credit to Mike Wilson, the chief equity strategist at Morgan Stanley, who I think does a really good job. He's done a very good job of calling these conditions, and he said earlier today on CNBC that this is what you would expect in a typical cyclical bear market, where the last thing that finally has trouble are the defensive parts of the market. And he noted that we've had almost record outperformance by defensive parts of the market. Now, so from a market structure standpoint, I always come back to the basic principle. You don't even have to think very hard about this, traders. You don't have to, worry about if it's cyclical or secular or is it earnings? Is it interest rate policies? Is it global fears of a resurgence of COVID in China? What is it? You don't even have to worry about any of that stuff. All you have to do, and I'll share my screen here, is look at the supply-demand equation. And math makes this very simple for folks. I'm a simple guy, so this is how I think about it: that you want to be where things are big and stable, and that's going to show up in energy and utilities. And then when the equation begins to change, the supply-demand equation. So here's the demand side. It's been very steady at 5. There's actually, curiously, some elements of tech in here, but they're deal stocks. That's what's doing it. There are deal stocks in that mix that will show you these things. But the principle here is when the either side of the equation begins to deteriorate, that's when you leave, and it certainly supports it, Dennis. So here you have this was the supply equation the last 5 days for this whole group. And when it begins to rise and demand does not, that's when things break down and you leave. So yes, that's a long-winded answer to saying that to me, that's a good time to take your money off the table.
What is there anything that anywhere you would be looking right now, Tim?
So if I were to pick something out of this group, here's something that you probably wouldn't think of. PS Business Parks. And I don't even really care about this, but PS Business Parks owns commercial properties. Not a big stock, 4.6 billion in market cap, trades about $8,000 at a time. That's quite liquid. And I look at this and say, the deterioration on the supply side makes this very attractive. It might be reporting results this week, perhaps today. So beware of that. But looking at it pre-market, you'd say, well, there's something that's going to outperform the market. And it's because of that supply-demand equation. But I think you have to be that specific during circumstances like this. You have to look at the things that offer the best returns. And math does this. This portfolio that I'm looking at is automated. I don't do any of the thinking. I just open Market Structure Edge and look what's in it every day. And it's on the dashboard for every Edge user. You could do the same thing. You just look at it and go, okay, well, there's the best thing. The supply-demand equation looks pretty good in that. And things that look like that, you can trade in this kind of environment.
All right. If we have any questions for Tim, anything you'd like him to take a look at, drop your ticker form in the chat. We will try to cover one or two in the next couple of minutes here, Tim. Is there any specific catalyst aside? I know you're always watching the options expiration, but aside from options expiration, is there any specific catalyst on your mind right now in the next week or two?
Yeah, month-end window dressing. It's part of the mechanics of the marketplace. And traders, you have to think about these things, that at the end of months, hedge funds, passive asset allocators are going to look at what they're doing relative to their risk expectations, their asset allocations, and they're going to make some changes to that. Tends to be in the last roughly 3 days of a month. Could be a little bit more than that, could be less. It depends on conditions. I think in in challenging conditions like we have right now could take a little longer than that. So you have to be thinking about that. Broad market sentiment is going to tell us to some degree. This is the green line. Notice that here's that, see that little green? I don't know if you can see that, folks, but
Yep.
this is options expirations. It was split into 2 weeks this time around. And I said again before I left that and I'll answer your question, Spencer, I'm getting to it. That creates opportunity for arbitrage. I can trade one expiring set of options or futures against one that hasn't, but will in 3, 4, 5 days. And that finished right here. And then immediately the market fell apart. Yet the demand side of the market is rising. You would say, well, isn't that a sign that we could have recovery? Well, we might for a couple of days, but a weak top. See, this is really the trouble. Here's where we peaked back at the end of March, end of the quarter, and it's been really miserable ever since. And the supply side is rising. So as you see that heading into month-end window dressing, it tells us that we could have more trouble. That's what it's telling us.
Hey, Tim, before we let you go,
yeah, Joel,
I've come up with a new segment.
Yeah.
A real quick segment. It's called.
Should I write this down?
Yes, and it's just me. It's called Quast Gnostics.
Quast Gnostics.
Okay. Yes,
I like that.
Yeah, and what we're gonna do is we're gonna take 2 stocks.
Okay.
And I'm gonna guess the rating. Okay. And then we're just kind of analyze it. Okay.
Good. And you know ready? The word Gnostic is a Greek word that means superior knowledge. That's what it means, by the way.
Of course, Tim knows that too.
I should just quit. I should just be done for the day right now, man. I'm getting complimented by Tim. Okay. The first one is American Airlines.
Okay.
And I'm gonna go AAL, and man, I'm thinking this is like a 7 or 8. What do you got for me?
Well, that's very well done. You can see why it's done well. It actually hit 10 on Friday.
Oh,
okay. And so now, if unless the supply side stays below trend, I mean, it's starting to turn, but that's why that has done very well. And generally, when it has rising demand and supply that falls, the stock performs very well. Once those begin to deteriorate, see this? If this falls and supply rises, then you're out. That's what you look for.
So I'm not shorting it yet. Okay. And then if AAL is at a 10, then Johnson & Johnson must be at a 10 still too.
I don't know. J&J is so often a big 5. It's a big and stable stock. It's a core stock. Great thing to hold during rocket. And there you go. But look at the supply demand equation again. This is
5?
why it's a 5. And it spends a lot of time at 5 because it's not about price. It is about the underlying behaviors that drive price and volume. So the reason that J&J did so well in here is because of the big supply side deficiency, which you can see. If you look at it and say it's a 5 and supply falls, that stock has a high probability of rising, particularly into options expirations. It tells you people are using it as a hedge, but it's over now.
Nice.
Look at the supply side. So when you have demand steady but supply rising, time to leave J&J.
Wow. Okay. So I guess I'll go 0 for 2 on my first Quast Gnostics.
No, but you had those were very good picks. They were excellent picks. You're just talking about you're talking about entries and exits, and you've done that. So that's what we're covering. Those are both very good. You actually have one momentum and one low vol trade in that mix that you had. So that's very good. That's exactly the 2 sides of the coin for every trader in any market. One of those 2 will always work. Doesn't matter what's happening in the economy, in interest rate policy, COVID, any other thing. One of those is going to work.
I've got one for you, Tim, here, and I know this one's close to your heart as well. Virtu Financial, VIRT.
Oh,
because this is a stock that actually is supposed to perform better in a volatile environment, but the stock has been coming down here. What's market structure?
I'm guessing a 4. My guess is a 4. Let's see.
Well, you pegged it. It is exact. It's 4.2.
Nice.
Spencer, you
4.2.
nailed
Oh
it.
man,
Nailed it perfectly.
Spencer's got this figured out.
he's got the thing open on his.
No, I
He's
swear.
got, yeah,
I swear,
cheated.
Joel. No, I swear.
I know.
And the time, so traders, if you buy rising demand and falling supply, doesn't matter where the supply line is, that's where you get your gains. The moment one of the two things changes, leave. Right here, so right there, April 7, that was when demand ticked down and supply ticked up, leave. Take your gains and go find something else. Go find American Airlines, go find J&J. And each time you do that, you're taking gains, not chances. My favorite phrase, right? So right now, what would you do? Well, don't buy this. You want these things. You want demand to rise and supply to fall. When that condition exists, then Virtu will be a good trade again, no matter what their financial results are. That's the problem. There's so often a disconnect between fundamentals of business and what happens to stocks in the stock market because so much of the money isn't focused on fundamentals. And that's why this is so important.
All right, Tim Quast, he runs Market Structure Edge. Link to that is on the screen and in the chat and the description. I mean, Tim, always a pleasure. Great to have you back. We'll talk to you again.
Good to see you, my friends. All right, have a good week. See
all right.
ya.
Let's do some ticker time. There was a bunch of tickers in the chat from earlier. Let's go to a few of them right now. Let's look at. We've already covered a bunch of these though. Okay. Let's stick reopening. Let's go to the cruise lines here. What are your guys' thoughts on like a Royal Caribbean right now?
I like the reopening aspect of this.
Me
It's
too.
a stock that makes me interested on a pullback because I think there is demand to do stuff like this because we've all been locked up for 2 years. But we're just in, again, the market environment is not allowing. So if we go to turn, if we start to see, like, okay, this is, maybe we're getting a market turn, I think this is a stock that could lead us out. So I actually kind of like it from that perspective. But I'm just not buying anything until I start to see something turn here.
I'll just, there's some stocks that are just a little bit tougher than others, and I think I'll put RCL in that category. I mean, yeah, it had that nice run off the March low, pulled back. I mean, what I like to look at when I'm looking at the cruise lines is CCL, a little lower price, maybe need to trade a little bit more size. I would like to get closer to 18. That looks like really good support you had in that area, so I'd start perhaps nibbling in there, and then if it got down closer. So as long as it stays above 18, I like it. I don't know. I mean, this just like nothing just seems like the reopening trade. The stocks are acting well. We've seen some good price action. It just seems like there's other factors like inflation and the war. Just reasons not to be all super optimistic on these. And overall, they've been real choppy trades. But I like Carnival Cruise Lines closer or 18. Don't mind it here. RCL, if I had to give a level, I mean, you got your resistance up there. 80 looks like minor support today if you get a chance to buy it there.
I'm not sure how either of you feel about cruises. Hot Dog Jones says cruises are the golden corral of vacations. Sometimes Golden Corral hits the spot though. Not like
I like Golden Corral.
I like cruises. I like cruises. I know.
I go cruising.
Joel hates cruises. I know that. But
if you go on a cruise, you go to Alaska. Okay,
right.
That's the cruise you go on. That's what you have to do before you put that on the bucket list, and just don't go by they have that midnight breakfast thing. Just don't go near there. You will get stampeded. They do that midnight breakfast.
Yeah, the midnight buffet. I haven't been on a cruise in a while.
No, I'm not going on a cruise.
I know you're not. All right, back to the chat here. Let's look at trying to avoid the ones that we've talked about like all week last week. Okay, let's look at LYV, Live Nation. How's that one looking?
Reopening stock.
Yeah.
So you think in this environment it's starting to look a little bit healthier, but again, it's kind of just gone nowhere. And again, victim of the overall market here. $100 is great support. We're getting down there, 109. Well, I don't know if this 109 tick in the pre-market. I think that's just a bad tick. I think you're really, unless there was news on it. But I see that on FINRA. So I'm looking, hasn't really traded much this morning, but it's probably trading around 105. $100 is good support. again, I just don't know. It's been tough buying stocks and support because the support doesn't hold. So I'm just not in the mood for buying stocks. I'm hoping I'm going to be in the mood eventually here, but not in the mood yet. But it's a reopening stock. It's the kind of stock I would want to own if I was buying stocks.
It's hard for me to give you a buy level here, but just like 115, 115, 115. I mean, if
Sell
you
'em.
are trading it short term and you get a pop up to that area, boom, holding, at first I'd sell it if I did have it up there. That's a big red bar on Friday. So that's 115 major resistance. And I mean, you can lean on yesterday's low, if you just want to throw a dart. But, after that, there's not much down to the low of the move.
How about Lulu here? This thing it had that rip right from 278 to
Yeah.
about 400, and now we've declined by $60 in the last week. But
I'd be a seller of this on strength because I think it's broken here now. It's broken trend. Again, this is a place where Darling, where they've been hiding, was not hit with the growthy names, probably because this company is just best of breed. It's been best of breed for a long time. But I think we broke it the last couple days. So if you get a rally up to 370, 380, I think you're using that strength to sell.
Oh boy, I just don't like Danger Will Robinson here.
No.
358.57. That is the low on March 30th. You traded down in the pre-market, and the rally that you guys poo-pooed me about, the rally that I talked about 15, 20 minutes ago, is now continued. We are now it's funny how the last after hours print, Triple D. I know, well, you trade till 8, but the last after hours print in the SPOOs was 51.75 after that ridiculous 67.50 close. There we are. We're right back there. You got some buying balances, Triple D, or do you just have like a book or something on your buy button?
No, we're
over
we're
there?
coming up here. We're just slowly coming up. The balances are very small. The institutions, like I
Okay.
said, a lot of them aren't even at their desk yet. I see a few for 343,000 to sell. It's somewhat notable, but it's quite an imbalance land. This is just a bounce. It's another bounce. And
Another
we get
bounce.
these bounces, these 20-point bounces happen over the course of the last couple of days. Maybe we go green, maybe we sucker in. We never make it that easy on the shorts, and we are oversold. So we bounce a little bit here. I mean, what was the low overnight?
Low overnight was 42.1850.
So we're now 30 handles off the lows.
Yep.
So it's been a nice bounce. Again, you're coming in this morning, like what an ugly morning for the market, but we've bounced significantly here. So I'm using strength to lighten up.
gosh, every stock I pull up from the chat is just down, 20, 30, 40, 50% from its high.
And there's obviously stocks that are not, because we're only down 12% on the S&P here, so there's a lot of stocks that are
not the ones that
held
I'm
up
looking
better.
at. Let's look at Comcast here, which is it's down only 26% from its
Completely hiding place where people have been hiding and saying, oh, I'm going to hide for the dividend. But again, we're in a rising interest rate environment. The dividend's not even that great on this one. Broke down on Friday. That's an awful looking chart. So now you had this major resistance point, which Joel has drawn a perfect line for you up at 48.25. We couldn't get through there. Now we're resolving to the downside. I think you're selling rallies because I think the stock is eventually making new lows.
And well, you had a little bit of a catalyst there, right? On Friday, your Verizon got Verizon.
Yeah,
Wow.
it's true.
Now that's trading down another 88 cents. But we know what's looming at 51. I don't know if
that's that buyers. They were right there. So I
Yeah.
mean, okay, if you want to buy the dip in Verizon, this level is of all levels. We're
Yeah,
here
there
right
you go.
now. There you go. We found something that maybe should bounce. I would think, nothing is certain, but I would think this is a logical place for the stock to have a little bounce off this 51.
Yeah, who knows how far it will go.
No
But
position here.
hey, before I go, I just I've been working with Rob over at Stock Odds a lot, and he's come up with something, a new product. It's the top 10 odds for the day. And I know stock odds can be kind of complicated and working the whole thing, but what's he started out is it's just 10 stocks. And he gives the stocks the probability of them moving higher or lower, and he also gives you some hedges. So I want everyone to check that out. I just put a trial in there. Go there, use the code PMP to get a little bit of a discount.
Where'd you
And
put
then
it?
on
Wait. Where'd you put it?
I just didn't I just put it into YouTube?
I
don't see it.
I don't see it.
Really?
Yeah.
We're not making it up. Yeah, that's not.
I don't see any.
What did
I
I
don't see any
do?
messages.
Unless you put it a long time ago and it's just scrolled up.
Well, it's a delay on the YouTube, isn't it?
No.
The chat's pretty instantaneous.
No,
so,
it's
yeah,
not. It didn't go through.
I wonder if it got blocked. Okay. Well, I'll tweet it out. Anyways, you could go to stockodds.com anyways and use the code PMP. And then
Stockodds.com or stockodds.net?
Stock odds on here. It says mystockodds.com is what it
My
says. But
stock odds. So we got to give these URLs right when we're giving. You want to bring people
I put it
over.
in the.
It's important to get
chat.
these URLs correct.
I put it in the chat, so maybe it got blocked here. So for some reason, but
yeah, I'll drop it. You said it's my stock odds.
here I'll drop it to you, Spencer, in
it.
Slack, and then you
got
can
it
put it in there.
I got it in there. There it is.
Well, here's the one I want to use. Did you get that in Slack?
That's the specific.
All right, this is going on too long, so we're going
It
to
is
get
going
these
on too
links
long.
out
No, it's
here
not.
for you. Well,
Okay.
Okay.
That'll be a wrap for our show. Hey guys, I am subbing in for Money Mitch today over on Live Trading, so I'll catch you guys over there. Coming up right now, myself, Ryan, and Zunaid. Hey, something else I wanted to plug. Totally free thing here, but if you haven't gotten a chance, we've been gradually revamping the Benzinga.com experience. And if you haven't checked out the new pre-market page where you can watch this show on the page, it is slowly but surely becoming one of my go-to resources in the morning. It's literally just benzinga.com/pre-market. Our show streams there. They've got movers, they've got earnings, they've got ratings, they've got news, all the relevant stuff you need for that morning specifically for the pre-market session is on that page. They've made it a lot better in the last couple of months. So if you haven't been on that page for a while, check it out, benzinga.com/pre-market. It is slowly but surely becoming one of my go-to pages that I look at in the morning when I get to my desk. So thanks to Tim Quast. Thanks to all of you in the chat. Smash that like button for me, please. Craig says we need to update our pictures. Yeah, maybe. We'll see. And have a great rest of your day. Good luck at the Open. I'll catch you guys over on Live Trading with Benzinga coming up live in like 2 minutes. Should be fun.